Welcome to the weekly review of the markets for week ending February 1st, 2019 from Hernandez Retirement Services. This is Agustin Hernandez. Before we begin the charts, the opinions voiced in this material are for general information only. All performance reference is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly. Technical analysis is the forecasting of future financial price movements based on an examination of past price movements and cannot predict the future. Technical charts reference are subjective. No strategy can ensure success or protect against loss. Investing involves risk including loss of principal. On this week's agenda, I will go over the results of the S&P 500. With the Fed's decision to become conservative in raising rates in 2019, did the S&P get into bullish territory? I will review two other time frames in which the S&P was in similar situations and the vastly different results that occurred. How strong has the 10-year Treasury note been? I will then look at other markets and assets around the globe that are beginning to gain strength. Brazil, Indonesia, gold, and Hong Kong. We start this week with the S&P 500. Let's look at the last 5 bars on this chart. As we see, the week started in the negative. There was fear that future earnings may not be as anticipated. But on Wednesday, Fed Chairman Powell gave in to the idea that raising rates, as previously stated several months ago, was not in the cards. After that, U.S. markets took off. Now, whether we agree or disagree with the Fed is not important when it comes to reading the charts. So let's just focus on price and the moving averages for this index. We are beginning to get to an area where it is put up or shut up for the S&P. Price is finally getting close to its long-term trend indicator, the 200-day moving average. The last time it got above this line, it failed to continue the uptrend. So the first step will be, let's get price above its long-term moving average. Now the quicker 50-day moving average is still below the 200-day moving average. The line is trying to first flatten out before an attempt to slope up and attempt to break above the 200-day. But as of now, the reality is that despite the strong rally in 2019, the moving averages are telling us that the all clear is not in yet for the S&P. Now, to demonstrate the importance of moving averages as indicators, let's look back at other times the S&P was in similar situations. Here we have a chart of the S&P 500 from April 2008 until July 2008. Now, beginning in April, the S&P started a counter-trend rally. We see price peak above its 200-day, and we see the 50-day rising as well. But two things happen. One, price bounced backwards once it hit the 200-day line. And finally, the 50-day moving average failed to get above its longer-term trend line. Now, what happened after that failure to cross over? The S&P started a new downturn in weakness and eventually dropped to 676.53 on March 9th, 2009. Here we focus on the S&P 500 during the span of January 2016 until June of 2016. The chart begins with a negative crossover of moving averages early in the year. And for a month and a half, the S&P struggled. Then in mid-February, it began a counter-trend rally. In early March, price broke above its 200-day moving average, which was a great first step. Later in April, the 50-day did break above its long-term trend moving average. Price did pull back a bit shortly after, but it did hold above its 200-day line and the 50-day held its place. Price eventually got back above the 50-day and the S&P ended the year higher at 2238.83. By being patient in 2016, we saw the S&P go into a bullish pattern. This is when price and the 50-day are moving higher above the 200-day moving average. Hopefully, I was able to show the importance of being patient. Now let's look at the 10-year U.S. Treasury note. Despite U.S. equities showing strength after the Fed signaled a dovish stand to rates, U.S. 10-year Treasury note ended the week up 0.41%. Now, it has fallen slightly since the beginning of the year because of the U.S. equity rally, but notice as of now, it has not breached its 200-day moving average. In fact, it has not even breached its rising 50-day moving average. That shows strength in this asset despite the stock market rally headwind it has faced in 2019. Now the key will be, can it break above its old high of 123.508? For now, this index is showing resilience and has kept in strength. Can it continue? It will be hard if the S&P and other U.S. equity indices continue their rally. But as of now, this index has shown strength. Now let's look at other assets and indices that are beginning to show early strength. Here we see the Brazilian Bovespa stock index. Last week it continued its uptrend. There are a lot of positive signs here. One is that price is rising above its 50-day moving average. Also, its 50-day moving average is also rising, which shows strength in this recent rally. Finally, both price and the 50-day moving average are above its long-term 200-day moving average. At some point, there will be a pullback. The key for this index will be, can price hold above its long-term 200-day moving average? And can the 50-day, despite a pullback, also hold above its 200-day moving average? As of now, this index is showing early signs of a future bull run. Now let's see what is happening in Indonesia. The Dow Jones Indonesia Stock Index also shows signs of a potential bull run. After a rally led this index above its 200-day, price paused for a bit. But once the 50-day crossed above its 200-day line, a new rally ensued. Now, what I would like to see if the long-term trend line can begin to slope upward, joining the upward movement of price and the 50-day. It has flattened out, so we may be witnessing this country's index start a bull run. Now, let's go see if gold is still trending higher. Gold has continued its recent run. Like Indonesia, price rallied above its 200-day line and paused. Eventually, a positive crossover happened and price began a new upward movement. Now, the good news is that price is above both its moving averages. Also, the 50-day is on a nice upward slope. But currently, the 200-day is still sloping down. The first step will be to flatten out and then see if price and momentum are strong enough to get this long-term moving average moving up. Now, I would like to add a new index to this list. It is the Hong Kong Hang Seng. Here we have an early possible developing bull run. It is early in the process. Right now, price did top its fallen 200-day moving average. Now, price has been in a nice rally to get there. At what point will it pause or pull back? And during that time, will the 50-day break above its 200-day line? For now, the 50-day is sloping higher, and it will need a bit more time to potentially get above it. But as of now, this is just potential. A moving average crossover can fail, and we may see some downside movement. So for now, it is just wait and see if the Hang Seng can mature into a bullish rally. What does it mean? Despite the Fed telling markets that they will not be aggressive raising rates or reducing the balance sheet, the S&P is still in a downtrend. Price has yet to get above its 200-day moving average, and its 50-day moving average is still below it. Now, this early year rally can continue, and eventually price and the moving averages can get into a bullish pattern. But as of now, that has not yet happened, so patience may be a good strategy. After all, in 2008, when it failed, the new downtrend started and did not stop until March of 2009. The key in using basic indicators such as the 50 and 200-day moving average is not guessing a top or a bottom. It is about identifying the current long-term trend of the market. Let the market dictate its health. If the S&P is going into a bullish run, it still may be weeks away. Now, the U.S. 10-year Treasury note has shown strength despite the headwinds of the U.S. stock markets and the Fed. Now, for it to get into a mature run, it will have to break through the high it reached in late December. Finally, the fact we have Brazil, Indonesia, and gold trending in a bullish direction is a positive. In 2018, not many assets ended the year in the positive. Though we may be fixated on U.S. stock markets, looking outside we may find other assets, countries, or sectors that may be showing strength. Keeping an open mind can help identify a new bullish run while we wait for the U.S. stock markets to get into another bull rally. I would like to thank you for viewing this video, and I hope it was helpful. Please subscribe to my channel for future videos.